Hey, welcome. So, a lot of talk out there about a recession lately. Some people say we're in one, some people say we're not in one. I think we're in one, but there's not really anything to worry about. I want to dig in a little bit on specifically real estate and how the real estate market changes in a recession. We've got tons of data on it, so it's easy to look at and see that it's not that bad. So, the first thing is that we see the Fed is hiking their Fed funds rate, which is, as you see, the short-term lending rate that affects overnight lending from bank to bank. It's shorter term lending. It's not mortgage rates. So when you see that they hike 50 basis points or 0.5%, it doesn't mean that, boom, mortgage rates went up 0.5%. That is not the case. So what we do see on this chart, though, we see these lines, these vertical lines are all recessions. And we see that before them, we see the Fed hiking their Fed funds rate, hike. They hit a recession and they go back down. And that's what we're seeing right now. We're seeing hike. What's going to happen? Time and time again, we've seen what happens. But we can't have a recession because unemployment is really, really low, right? Can't have that. Can't have the two at the same time. Well, that's what happens every single time. It's when unemployment is at its lowest or very low and starts to creep back up. What happens is you've seen, Facebook, Twitter, all these big companies are laying people off. Well, now that they don't have a steady check coming in, they're probably going to be less likely to go out to eat, to spend on more so fun things, right? And what happens is the businesses that rely on that income, restaurants, and businesses of that nature, they start to see less business. They have to lay off some folks, and it really snowballs, right? And that's what we see time and time again. So what this means is we got to keep an eye on this. When it starts to tick up, you can basically say, hey, we're in a recession. And a lot of folks have been saying that already. But when we get to the real estate market and mortgages, we see that there's actually good news. Mortgage rates tend to come down when we're in a recession. You see this drop here, time and time again. Again, these are all recessions, these vertical lines. And we see mortgage rates come down when we're in a recession. And this makes sense, right? When you're in a recession, the economy is not in a good spot. So in order to help boost it, mortgage rates come down to incentivize spending money, buying a home, and boosting the economy. So it makes sense that mortgage rates come down in a recession. The other thing is, well, home prices. If we look at home prices, aren't they going to crash in a recession? Should I be worried about that? No, we look here, let me see, 4, 5, 6, 7. Of all these recessions, only once has home prices came down. In all of these other ones, it's either stayed steady or increased. The only one that it didn't was right here, 07, 08. And that's an outlier because the recession itself was caused by the collapse of the housing market due to poor lending practices and oversupply, right? So that's, again, good news. Okay, we said in a recession, mortgage rates come down and home prices stay the same or go up. Well, why should we be worried about buying a home in a recession? We shouldn't be, right? So quick recap, Fed hikes, they go in boom and bust cycles. They're driving while looking in the rearview mirror because the data they see is on a rolling 12-month average, meaning that they're not looking at what's happening today, which is why you see that boom and bust. And they just don't fully understand that and look at the data that's happening in real time. Unemployment, we see that recessions happen when unemployment is low and then starts to increase. So when somebody says we can't be in a recession, unemployment's low, well, this happens over and over again. And then already touched on it, but mortgage rates typically go down and home values go up. So buying in a recession, not as scary as it sounds.